Good morning. It's Tuesday, May 6th. Thanks for joining me. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So looking at the markets overnight, U.S. equities under a little bit of pressure here, dragged down by earnings and a lack of positive news with the trade negotiations. You look at the S&P 500, it's had its longest winning streak in 20 years. Many people were long U.S. equity futures with us trimming some of those positions, putting on some put options and some put spreads here, and wisely looking at those resistance levels. 5,700, been a bit of a bull battle line here, and if you get the chart pack, I identified some of these key levels of support and resistance on the S&P 500. Now looking at this recent optimism, it's fueled by the U.S. trade concessions here. It's starting to fade a bit here. Markets are bracing for an economic slowdown, reducing some of that exposure to the U.S. equity markets and expecting fewer Federal Reserve interest rate cuts. You look at the earnings front here, Ford and also Mattel, they had pulled their guidance. You got Ford down about 2% in the pre-market, and Palantir here as well, down about 9%, really kind of whipping around here in the pre-market. So the S&P 500 down about 30 points, 56.41. Low of the overnight session, 56.29. High of the overnight session, 56.73. That was where the market basically closed at. So we saw this steady grind higher in yesterday's trading session, getting back just above that 5,700, 57.05 before the rug pull in the final hour here ahead of some of those earnings releases. You also have the NASDAQ trading down about 150 points. It's down 0.75%, and we're trading at 19,900. The Dow down 165, and the Russell back below 2,000. So looking at some thoughts here on the market, something to note here is that the volatility index has fallen back to levels before these tariffs and tariff fears got going here in early April. So the VIX curve is starting to signal that market turbulence may return in the months ahead. So we're going to want to keep an eye on VIX. And remember, if you trade futures contracts, there is a micro VIX contract that we're going to be looking at here today and going forward. So some thoughts on these markets. We did have this longest winning streak since 2004, but these types of equity market recoveries are typical for bear market rallies, with these sharp rallies, erratic swings here causing some pain for investors. The uncertainty is really the biggest market driver here, and the lack of long-term conviction being the short-term headlines and the guesswork that are really driving these markets around U.S. tariffs. Now looking at the Fed meeting, and this is the highlight of the week, but we'll have tomorrow, is that investors are kind of positioning themselves ahead of tomorrow's FOMC meeting, where no change was widely expected. What Wall Street's going to listen to is when you go 30 minutes later, when Fed Chairman Jerome Powell, he's going to give his comments on how the economy is holding up and the impact of global tariffs here from about a month ago. So we'll get the trade balance data here coming out today. And then finally, let's look at the precious metals and let's look at the energy markets here, because you got some big moves. You got gold futures up about 2%, 33.91, breaking through that resistance, 33.65, getting close to the 3,400 level before backing off just a bit. You have silver futures up about 2.5% right now, outperforming the gold market, but not necessarily reflecting in the gold-silver ratio. So it's really, when you look at gold and it's making its moves, it's not why is it making its moves, it's when is it making its moves. And gold is extending its gains as the world's biggest bullion buyer had returned from holiday. And who's that? You guessed it, China. So you look at some other things here in these markets, the ETF flows, you got exchange traded funds. They cut about 138,000 troy ounces of gold in the previous holding. So you look at the gold year to date percentage flows into the ETFs, coming off just a tick here. But what's more important here is that ETFs added 500,000 troy ounces of silver holdings in the previous session. So you get silver with an uptick of about 2.4%. The key level on the gold-silver ratio, obviously 97-1. That's the April 23rd low. Now, if you look at silver here and you look at copper, those have really extended their gains. And the same thing with palladium back at the resistance level at 980. And why is that? Because China's central bank and financial regulators are going to hold this press conference here tomorrow, and their aim is to stabilize the markets here because of the U.S. tariffs. So they're going to watch want to watch here to shore up confidence here, particularly with the top leaders here pledging new monetary instruments and financial support. Remember, they set a goal of 5% as far as their GDP is concerned, and they want to hit that particular goal. Now you look at crude oil futures, that's another thing, up about 2.5%. And we've got a few things going on. One, the sell-off here matching a double bottom on the charts, a bit of an overextension downwards, and you could see that from that Sunday night gap lower, there was a gap on the charts. We started to fill that gap and price momentum's going to the upside. Now, what changes the dynamic on the oil market is that these lower oil prices are starting to impact supply outside of OPEC. You get Diamond Energy trimming its production forecast and expecting a 10% drop on onshore rigs here by the end of the second quarter. So what happens is that OPEC floods the market, oil prices come down, U.S. shale producers here, which have been a dominant player in the oil market, all of a sudden are unable to operate at such low prices. They throttle down some of the rigs and they stabilize prices and they come up to this happy medium. So we're going to want to look at what that price band is, probably in the 55 range on the downside on up to about $65, $68 on the upside. Not saying that the market's going to travel up there. We'll want to look on the chart pack here where you've got this downward resistance point, and that's kind of the return to where markets can go. So we'll identify that point as well. An interesting read last night here was that the Shanghai Gold Exchange plans to expand its warehouse operations and network in Hong Kong, and it's going to be operated by a Bank of Japan Bank of China subsidiary. So China is becoming more and more of a player in this gold market, and I think that with their insurance companies looking to allocate towards gold holdings, with individual retail investors really getting that speculative boom into the gold market, we could see some great things ahead here, especially for other correlated metals like the silver market, like platinum, like palladium, like copper. So keeping an eye on some other things here. You do have Bitcoin futures kind of traveling here between support and resistance. You got the dollar index down about 25 basis points, and then you got the grain markets with corn extending its losing streak but snapping back in the overnight session. So we'll want to look at some opportunities there as well. You guys got any questions, futures option trading? Shoot an email, info@Blue Line Futures. Remember, futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.